What up, gang? Thrive DeFi, coolest crypto outlet in the world. Today we've got some pretty interesting news as Bitcoin's price is holding on a very crucial level. We see that major cryptocurrencies such as Bitcoin and Ethereum fared somewhat better than the broader stock market in early Tuesday afternoon trading as market participants brace for another likely aggressive interest rate increase by the Federal Reserve policymaking arm. As the Federal Open Market Committee kicks into a two-day monetary policy meeting today, traders are pricing in an 82% chance that the Fed fund rates will be lifted by 75 basis points to 3 to 3.25%, compared with an 18% probability of a more aggressive 100 basis points rate hike in the wake of August's hotter than expected inflation print. This Fed isn't the only central bank scheduled to release a rate decision this week. To name a couple, the Bank of Japan and Bank of England's policy decisions are due on Thursday. As you can see right here, Bitcoin is holding this key support level from the 2017 bull run high, which if this breaks, we might see a significant drop down. As well as the DeFi index, we're holding this level of support, and if we can't hold this level, then we will most likely drop down a significant amount. Next up, we see DeFi firm Maple Finance is starting a lending pool with 300 million capacity for mid-sized Bitcoin miners across North America and Australia as crypto winter continues to weigh on the mining industry. Raising capital has become difficult for Bitcoin miners this year as the price of Bitcoin has slumped and energy prices have skyrocketed. As traditional sources of capital have dried up, new financiers like Maple are looking to fill that void. Recent market headwinds have caused lenders to pull back, while traditional financing vehicles have been slower to engage this sector, said Sidney Powell, CEO and co-founder of Maple. He also said that miners play an essential role in growing the crypto ecosystem and local economies, and we are proud to extend a new financial vehicle to direct capital where it is needed the most. And how these loans are going to work is they're going to have a 12 to 18 month tenor and will have interest rates around 15 to 20% and will aim to deliver low teens risk adjusted returns to accredited investors and capital allocators. This is the first fully collateralized loan product for a specific industry sector, as Maple's bread and butter are uncollateralized loans to market makers and other crypto firms. And as of right now, Maple holds 50% of the DeFi lending market, measured by total loans outstanding across institutional DeFi lending platforms. Since the launch of the first pool in May 2021, the liquidity pools on the Maple platform have issued close to 1.8 billion in loans. Next up, we've got a pretty fascinating story as a savvy crypto trader deployed millions of dollars to manipulate the price of AVAX tokens on the decentralized exchange GMX, taking up to $700,000 in profits by using a strategy that exploited a basic loophole. Now, GMX is a DEX that relies on smart contracts to match traders between DeFi users. And the loophole, however, is that GMX offers trading to users at zero slippage, or the difference between the expected price of a trade and the price at which the trade is executed. But all the pricing data on GMX is derived from centralized exchanges such as Binance or FTX, meaning a trader could buy a large number of tokens such as AVAX, in this case on zero slippage, rapidly drive up the prices on centralized exchange by placing buy orders on those venues and selling the initial position on GMX at higher prices. And as you can see here from this chart, it looks like he wiped out a lot of traders. And it's important to note that this strategy won't work on two or more centralized exchanges, because a trader placing high bids on one venue would mean that prices automatically move higher on that exchange, and other exchanges would immediately raise the price of the asset on their own systems, meaning that the strategy is unlikely to net you any profits. However, Joshua Lim, head of derivatives at Genesis Global Trading, said that the trader exploited GMX loophole 5 times, netting over $500,000 to $700,000 in total profits, where security firm PegShield pegged the gains at around $565,000 in a recently deleted tweet. Last up, we've got NASDAQ, the second largest stock exchange in the United States, looking to capitalize on institutional investors by offering crypto custody services for Bitcoin and Ethereum. And if approved by the New York Department of Financial Services, NASDAQ will become a custodian of digital assets, placing the stock exchange in direct competition with centralized crypto giants including Coinbase, Anchorage Digital, and BitGo. And as stated from the NASDAQ president, the technology that underpins the digital asset ecosystem has the potential to transform markets over the long term. To deliver on that opportunity, our focus will be to provide institutional grade solutions that bring greater liquidity, integrity, and transparency to support the evolution. And I think their main goal is that retail investors, once they become more familiar with blockchain technology, are more likely to make use of self-custody options. And then, as stated from Tal Conan, the VP and head of North American markets at NASDAQ, demand amongst institutional investors for engaging in digital assets has increased in recent years, and NASDAQ is well positioned to accelerate broader adoption and drive sustainable growth.